What if you could learn to benefit from real-life tools that expand your faith and widen your perspective to see new possibilities for your life? Well, let me invite you to join us for our Word on Investing Summit, Money, Faith, and Mindset. It's a live virtual event. At the summit, you'll spend 2 days with world-renowned Christian business leaders and million-dollar entrepreneurs like myself, the Benham brothers, Dr. Myron Golden, and many others from the comfort of your own home. We'll be speaking on how your mindset, your walk with the Lord, and understanding economic principles from the Bible are the keys to unlocking your next level of financial potential. If you're looking to find a renewed sense of purpose in your financial and spiritual life, and make no mistake, they are connected, make sure to grab your ticket to the Word on Investing Virtual Summit happening April 22nd and 23rd, 2022, because registration will close soon. Get your free ticket at TRADEway.com/summit. That's TRADEway.com/summit. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God Himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is the Word on Investing. Hey guys, welcome to the podcast. You guys know that at TRADEway, we like to talk to folks about the biblical idea of the family business, where parents pass down skill sets to the next generation, and then that generation increases the knowledge base and passes it down to the next generation. So I'm really happy to have Ryan and Jamie Smith on as our guests today. Ryan and Jamie own Elevation Capital Group, and they control over $600 million worth of assets in 30 states. And both Ryan and Jamie's parents were in real estate. But these guys have sort of exploded the family skill sets and knowledge base with their own ideas, research, and business development. And I'm really excited to have you guys on today. Welcome to the show.
Thanks for having me. It's good to see you again. We're huge fans of yours and your family.
Well, thank you. It's mutual, as you can tell. Well, let's start with this. I know a little bit about your current big real estate venture because we had a chance to talk about it when we first met, and you told me a little bit of the story. And I can say this, I was totally surprised at the strategy that you chose, but I was totally impressed that it arose completely from your research and your data analysis, not from your feelings or desires or like expectations other than the numbers that you were looking at. And that's pretty amazing to meet people that will, even in business, people don't do that as much as they ought to. It was totally data driven. So tell us a little bit about how that data analysis that you were doing led you to what you're doing. Tell our friends what it is you're doing and how that got you there. And we'll just go from there.
Sure. So do you want me to?
Sure.
Okay.
Yeah.
So it's probably best if I speak first, because if she does, then I won't stand a chance.
All right.
Nobody would listen, rightfully so. But in short, her family was in real estate. My family was in real estate. And so one of the, I guess to start, when we got to the point of decision about going into mobile home parks and self-storage facilities, which is the kind of the unusual asset class you were alluding to, we had a base of knowledge by which to build on. So we had learned firsthand what didn't work, which brought us closer to finding something that did. Mm-hmm. And so we had accumulated a portfolio through hard work and all of that based on the limited knowledge we had at the time. But we had accumulated a portfolio of probably 20 to 30 single family houses in our early 20s. We found a limitation. It wasn't scaling well. We had thought that, once you got to 30 houses, you buy 30 rolls of toilet paper, you get a discount. Surely it works in real estate.
Right.
That was the base of our understanding. And so we got to 30 and it wasn't really scaling well. The savings weren't availing themselves. So we, you say, okay, well, I'm going to continue in the same direction and hope one day it happens. I'm already wrong once, right? I've already was wrong. So maybe I'll be right next time. Or you look for a better way to find what you're looking for in the present. And so that was the path we took. And so, Jamie and I kind of sat down and went through and built a fairly remedial model, underwriting model for mobile. It wasn't just mobile home parks. It was for every asset class we could think of. We could say, okay, let's look at, apartments, billboards, office, retail, hotels, motels, mobile home parks, storage. And the two asset classes from a data-driven point of view that accomplished what we were looking for. And so I want to make it clear, we were looking for something. You can't find what you're not seeking, and Bible, seek and you will find. Although I'm pretty sure the Bible verse was talking about us seeking, Jesus and not a financial outcome. But the point, the point being though, is we were looking for something. And the four things we were looking for were looking for cash flow, durable cash flow, capital appreciation, the ability to invest $1 and have some reasonable expectation that in the future it'd be worth 2 or 3 or more. A hedge for inflation. Boy, that's a relevant topic today.
Yeah. Really.
And then this thing that there's 27 ways to say the same thing. Low beta, cycle resiliency, non-correlated, said in plain terms, markets generally act like roller coasters over, pull up any stock chart and you wouldn't want to ride that ride. Generally they're, and so we wanted as much as possible low volatility or predictable growth to the extent that we could find it. And so given the filter of the four things we were looking for in our analysis, the two asset classes that really remained on the table as viable were mobile home parks and self-storage facilities. And in truth, that outcome surprised us. We weren't testing to prove our assumptions right. We didn't make assumptions. We were testing to find what might be the better path. But I think the last thing, and I'll be quiet along this train of answering what I heard as the question, kind of the last component part, because I think it's helpful if like speaking to me 20 years ago, or somebody listening to this where this could be helpful. I think there's a both and component, quantitative and qualitative, left, right brain, however you want to refer to it. But, we didn't come to the point of decision based on purely data where there was no risk in the outcome. There was still we think we're right, So yes, it was quantitative, it was data driven, it was analytical, but there's always the jump, the leap, the gasp, and so I say that because there's people, almost to your point in the question, there's people who they leap without ever analyzing. I don't know that that's the answer. But then I also know people who are brilliant and they analyze and never leap. And I don't know that there's a difference in outcome between the two. So it's a both and, not an either or, but you're still going to have to jump. There's going to be risk. It's going to be thrilling for some, depending on your makeup. It's going to be terrifying, depending on your makeup. But, that'll be there.
Well, I was going to ask, did your data analysis surprise you, what you ended up with? But you already answered that. You said you were surprised. And it surprised me when I first heard the story. And then I was able to be in a place where I saw you show some slides of some of the mobile home parks that you've created. And they look like they ought to be in North Dallas, They're beautiful. Curbs everywhere. Everything looked new. Totally different. Tell me about that. How did that idea come about? Because, that didn't come out of your data. That came out of your heart and your desire to do a certain thing a certain way. Tell me about that.
Yeah, sure. I think, and maybe taking a little bit of what Ryan has already shared, when we started the business, we had certain elements of information that we knew and that we were prepared to act upon. And so that plays a little bit into when you're talking about the different qualities of the mobile home communities and what to target and what might make the most amount of sense. But I'll say this just for the business owners out there that are listening. When we started, we started with analysis and some goals and some direction. But over the years, we learned that it was more advantageous for us to pursue assets that were higher quality in higher quality markets. Another way to say that is high quality assets that are well located. So in the beginning, we might have gone in and said, well, we'll buy these lower end properties and seek to drive value by improving them in certain ways. But over the years, as the business model matured, we came to understand that it made more sense for us to purchase a certain type of property. And so when you're talking about the quality of the mobile home communities, I could not agree with you more. When you're thinking about the segment of the population that you're looking to serve, which what we are looking to do is to provide quality and affordable housing to those in a certain income bracket that's generally defined as a low income bracket. So it's certainly a product that we're proud to provide, and we also believe meets the need. And then in addition to all the numbers and the financial reasons and the profitability that goes along with the business, there's a personal satisfaction that I think both Ryan and I get out of this particular business model, because we're helping folks that may otherwise never become a homeowner. And in that process, we're just making the property or the investments more valuable.
Yeah. Well, that's the first thing I thought when I saw the pictures of the properties and how amazing they look. Now, tell me, how many years ago was it when you first had this idea and you sort of launched into it?
Coming up on 20.
20. Okay. So y'all were like 10 years old when you started. No, I'm kidding. But you were very young when you started, but it was about 20 years ago. Well, you just got to be smiling on the inside. By the way, that Bible verse you quoted, that's not about just knowing Jesus. That's about ask what you will and it shall be done to you. It's about things too. I'm going to get on a rabbit trail for a second. When I grew up in church, most theologians and preachers in the Christian religion were talking about how, the Jews expected physical blessings, but in the church, our blessings are all in the heavenlies, right? And they totally missed it because it's never changed. It's always been both. It's been like blessings while you're here and blessings when we get there to heaven, because our Father's with us here too. So it's both. So really it does apply. Perfect application on the verse you quoted a while ago. But so here's my question. So it's been 20 years ago when you started this and you developed it into like $600 million business or more at this point. And as I go out reading, I don't read a lot about real estate, but I have to read some because I'm all about the stock market. So I read just about all business news every day, all the time. But what I notice is that this is the fastest growing segment of real estate in our country right now. So you nailed it 20 years ago and you're ahead of everybody else. So my next question is, are you going to take the company public?
No, it's a good question. And it's interesting. I would say the part that's caught on fire is the institutional interest, I'll say. And I think part of it is as suitable alternatives for yield started to dry up many years ago, it forced people to consider asset classes that they wouldn't have wanted to defend to their clients previously because it's too much work.
All they'd have to do is let you two defend it, though.
Well, I appreciate it. But so institutions are now really interested in the space, both mobile home parks and storage. But the underlying thesis has not changed, and it remains for us intact. The question, okay, we sit here today, 10 years from now, do you think affordable housing will be more in demand or less in demand than we sit here today? I don't think there's a lot of risk in that answer. I think it'll be more demanded than it is today. So when you look at it on the supply side of the equation, do you think over the next 10 years, municipalities are going to say, you know what, we want a lot more mobile home parks in North Dallas, right? You mentioned North Dallas. We need a mobile home park on every corner. I don't see that. So I think demand will continue to grow. Supply will continue to be constrained by a stigma, which is a moat that we think will continue to protect our capital to a degree. So I think capital will continue to flow to the space, but I don't think the underlying thesis will remain all that unchanged for mobile home parks and storage, largely the same. But as far as your comment on going public, we actually have considered it previously. We, at one point, were considering, listing in Canada because Canadians, from our understanding, like income-producing vehicles. They like dividends, and so that but we looked at it. But given all the challenges that public markets bring. We really like where we are and the way we do it. And, possibly down the road, I don't want to say never, but I don't see it anytime soon.
Yeah, I can understand why. I own a couple of other companies and think about those things. For one thing, the regulation is amazing and just the expense of getting it done. And then they may want to put a Wall Street boy in to run it. You may not want that, but it's a great business was my point. And it is just so cool to watch the success you've had, starting with some data analysis. Well, actually, it started with what you tried to do didn't work like you thought it would.
Yeah.
And in my experience, sometimes those things, we might call them mistakes. They're not really mistakes. They're stepping stones, right? To the next idea. And God closes the door because he's going to open the one he wants you to go through. And now you're in that. So congratulations. That is such an amazing thing, the success you've had, and it's going to keep going whether you go public or not. You don't have to go public to be huge. So that's awesome. Well, Jamie, I understand you wrote a book called Trailer Cash. So I was going to ask if you two work together, but then when I realized you wrote the book on it, I know you do. So tell me what you like best about the business.
I really, in the beginning, when Ryan talked about how we scaled from single family into multifamily, both of us really touched all aspects of the business. So the finding and acquisition of the properties, the due diligence, the financing, the property management, the disposition, all of that. And so we've both really always had a hand in all the aspects of the business. I think as I look at it now, I enjoy a lot of the strategy, the looking at which properties we should acquire, why, what's the upside, how are we going to do that? Those are conversations I very much enjoy. I also love being in the field. It's like a grown-up field trip. So anytime I get to be on site and see those plans playing out or meeting with the property manager, I always enjoy that. And then the last thing that I'd probably say on that is our business is, we also have a fair amount of investors that are involved in our business. And I do get significant joy out of engaging with them, not only as they participate in our business, but just building those long-term relationships. Folks that we started with 10 plus years ago as investors are now not only investors, but many of them have become friends.
And their kids are now investing.
Yeah,
and
it's true.
Yeah, that's awesome. That is really cool. Well, now you've got kids, right?
Yeah, 9, 7, 5, and 3. The girls on the bookends are 9 and 3 are girls, and then 5 and 7 are boys.
What a great thing. Those are great ages too. All the ages are great. The stages are wonderful with kids. Well, let me ask you this then. What do you think is the best way for parents to get their kids interested in entrepreneurship rather than going out and learning how to work for a boss? How do you guys plan to do that? Because you're already planning it. You're probably already doing it with the older two, at least. You're starting to talk about things that you want them to be interested in. So what do you think your plan is there to get them interested?
So I'm speaking, Jamie may have.
I'm going to give you both a shot at it. So
yeah,
go ahead, Ryan. You started.
I'll mess it up. She'll fix it.
Okay, that's a good approach.
To me, simple things have big outcomes, or big outcomes start from simple things. So trying to start with what I believe the root of entrepreneurship is as a core quality it's to me solely curiosity, nothing else. So to me, we try to breed curiosity into our kids. So, a comment that I make all the time, to all my kids is they'll do something, they're excited, they want to show you and share. And I'll say, that's amazing. That's really great. I wonder what else you could do. So everything's, I wonder what else you can do. I wonder how you could do it, So I was an incredibly curious kid. I'm still very curious and drive a lot of people crazy. With that attribute. But to me, I think that's the thing. If I can instill and distill for my kids, it would be to have a heart for just being curious. And, because that feeds into entrepreneurship. I think a lot of parents, and I think very well-intentioned, focus on, well, I'm going to put my kid in this class. I'm going to go through this program. To me, I think that's all fine. I just, if they're not curious, then I think it's going to be a challenge. I think kids seeing parents that are curious are helpful. I think kids seeing parents follow their curiosity is helpful and instructive. and creates a platform for the parent to then instill that same curiosity into their kids. But I don't know that it can be, it's that saying, it's caught, not taught. It's really hard to teach entrepreneurship.
Yeah, it can be taught, but I like the caught part the best, probably, where they see that it's fun, it's rewarding for a family to be able to work together, things like that. What do you think, Jamie?
I would very much echo what Ryan has said, because it does start from the inside out, that sense of curiosity and definitely the concept of it being caught, us living it out and then watching it. I think the things that I would add, perhaps, and maybe it's just an expansion of some of the things he said, was certainly exposure. We expose them to what we do very often, and we talk to them at an age appropriate level about what we do. If we're traveling to look at a property, or we're traveling to replace a manager, and even going through some of why that person needs to be changed out, or different, mm-hmm. They're very basic and they're very simple, but they're starting to process. So it's not like it's over their head and then someday down the road, we're going to pull back the curtain. Hey, this is what we've been doing all this time. We try to bring them alongside us at an age appropriate level, even talking with them about numbers, again, that would be relevant or something that they can comprehend, and talking about fairness and value. And then I would say, in addition to exposure as kind of an umbrella comment, I think something that Ryan and I really, really focus on with our children is quite simply character development. Because, and I'll speak specifically to the fruit of the Spirit. We talk to them about that a lot, because I think in the real world, the business world, relationships, you name it, I think this world and culture can be very disorienting.
Yeah.
So we always want our children to know, what is home base? Who am I? What is my character? What should my character be? What should I be looking for in a spouse? And in people that I live life and do life or even work with. So I think those foundational principles are very important to Ryan and I to instill in the children, because if they know that, they will go down a solid path. And their curiosity will lead them, but they'll always have that foundation in that home base. We spend a lot of time working through that and talking through that.
Yeah, that's fantastic. Well, you're talking about the fruit of the Spirit. We've got 5 grown kids now, and in our home, like just simple things like kindness. We taught them these things. And so they were kind to each other, and now they all love each other now that they're grown. They don't have any memories of bad words that were said to each other. And so things like that really work. And so what you're doing when you do that, you're building a team. And, if you go look at the Bible, the concept of the family business is throughout the Bible. Look at Abraham, for example, because it really does have the potential to build generational wealth that way. You can just work together and keep expanding those skill sets. So I'm glad you guys are working on that, even at their young ages. Now's the time. So, how old were you guys when you got interested in real estate? Can you remember?
So I do, but it didn't start with real estate for me. But it kind of did. I love to work. And we were when I was a little kid, we were pretty poor. And so we, on the weekends, our family business was either real estate, rental properties, or my dad owned a Vietnamese restaurant and I was the dishwasher, or he also owned a little pizza restaurant and I was the food prep guy. So I just loved to work, loved it. And so I then taught myself to code when I was 8. I met a computer and was fascinated, had to know how to work. So I taught myself to code, and I started a company when I was 13, was my first. And then I started another company in technology, all the while working with my dad and in my dad's business. But then around 15, I started transitioning. I started doing a lot of his underwriting. So when my dad would buy a property, I would financially model it. And I ended up starting a software company where I built an application that allowed him to sit down and do it for himself. So I was trying to solve for X, and my X was I didn't want to wind up in his basement, not allowed to leave.
Exactly.
So it was completely selfish. But
how do we save some work? Well, I'm going to invent this.
It hurts me more than it hurts you. That whole thing. But But anyway, so I kind of started with more of a technology lens that intersected with real estate, and then took it from there. But I've always liked to work.
That's cool. Jamie, how about you? When did you kind of get interested?
I really did, as long as I can remember, having an appetite for it. And I guess for the way our family participated in real estate, we would originally build the houses and sell them. And so when I say build them, we did it literally. My mom can wire a house. My dad would install the drywall. We'd paint it. I could run the wet saw, when I was, 6, 7 years old, and running the tile back and forth and mixing the mud. And so to me, and to your point about a family business, even though we were doing it because I now know we could not afford to pay somebody else to do it, I was having a great time.
Oh, that's great.
I was with my mom and dad and my brothers, and it was very hard work. I remember that. And I remember the stress of my parents and meet the deadlines and all that. But as a child, I just had a blast, and I thought it was fun working together. And I thought I'd love to continue doing that. And there's something that my family has always said on my mom's side of the family. They're very entrepreneurial, very hardworking, both my grandfather and my grandmother, which is somewhat of a marvel when you think about the time she was starting businesses in. And they used to always say that there's not a board that grandpa's hammered that grandma hasn't held.
And that's something
that always stuck with me, because I always loved that teamwork, that complementary effort. So I had fun as a child, and I was excited to be able to partner with my husband as an adult.
That's pretty wonderful. Wow. Well, guys, if you're out there listening, just think about this. When you have kids, make sure you instill with them the power of the family business, and let them know you want them to be working with you. And another thing you can do, they don't have to do exactly what you're doing. And you guys are an example of that. You can have your own division within the family company and do what you're interested in. That's what we do with our family. And it's worked great. Well, I want to talk about one other thing, because we're running out of time, but there are a lot of people out there. You mentioned $600 million, and people think, well, all right, so these guys are rich. And mostly our listeners aren't going to think this way. But if you look at America in general, Hollywood and through the movies and different things have demonized people who are wealthy as if they're all evil. And I don't know why the country wants to do that, other than the enemy, the big enemy, wants to do that, because it totally is a lie. It's not the truth, because the more that you have, the more you can share, right? So I think you guys have had a project going on that has to do with helping people have water in Africa. Can you tell me a little bit about that?
Yes. And I think before I dive right into that, I might step back for just one moment and maybe comment a little bit on what you're talking about, the wealth creation and the benefits of it within the kingdom. Ryan and I have always felt very specifically that the better we do, the more that is entrusted to us, the more that can be shared for kingdom purpose. So there's a huge driver and an appetite there for us. And I think probably many of your listeners feel the same way. It's not necessarily for the self-serving effort. It's so that we can serve one another. And I know over the years, Ryan and I have served and invested in kingdom projects, I guess, if you will. And we've spent some time in Africa there. And so we've helped do some micro loans and micro business there. One of those projects was a water project. We've also helped with a school there and an orphanage. And then those are things that we had done internationally in a country called Swaziland. And then we also believe that we need to invest at home in that way as well. So we've done things domestically, and we've got a great community called Fellowship of Believers. And maybe Ryan wants to talk perhaps maybe about just one of the things that we did during the pandemic with that this allowed to happen.
Yeah. So I guess, and I'll go through that. One, I guess, quick comment to me, to Jamie's point, I believe wealth can be a tool for building the kingdom. And it's, I think, God's grace alone that we are, let me say it this way, God doesn't need my money. He doesn't need a penny from me. The fact that he gives me a penny that I can give back to him is grace, so
Right.
Because it can turn into this, hey, I've got a good heart, I'm going to help all these people if you give me money, and it's kind of quid pro quo. It's actually a power play. It's
That's not how it works at all.
and it may look like it works that way, but it's the heart of it is off.
Right.
So, anyway, I think that's important, because 600 million, 500 million, $1, none of it's a pathway to heaven, but the point being is we're incredibly grateful that we can participate with what
That's the key. Yeah. Thankfulness.
Mm-hmm.
Yeah, incredibly. But the other thing I was going to add is, to me, like, our perspective on business, because a lot of times people look at it generally, kind of culture looks at wealth like, well, this is kind of the formula for wealthy people. You do whatever you can to make money, and then you get wealthy, and then you give to nonprofits so that you don't have to pay tax, and you kind of cleanse your soul through the washing of your money through social programs, and you feel better about yourself. And that's kind of the way it's looked at. But to me, the difference between a for-profit and a non-for-profit, the only difference between the two to me is the way it's taxed. There's no different in the intent. We show up every day trying to make people better and love on them, and
exactly
love them like God loved us. And so, ironically, people like people who like them. If you're nervous about going into a room, pick somebody and like them, and you'll immediately have a friend. Because everybody wants to be liked. So, if we love our neighbor like ourselves, and we pour that love out, that's the fundamental of a good business, which will produce profit over time, and then you give it. And so, anyway, but the FOB thing that Jamie and I love community. We're certainly love giving other places, but love your neighbor as yourself. I think a lot of people will really struggle to that neighbor part is challenging. So we have a community called Fellowship of Believers. It's now about 40 couples. We do Bible studies and all of this. But when COVID hit, it was a real, practical way to serve. So we, in March of 2020, I was curious, how many people were driving, by the front of my house every day, wondering how they were going to pay rent, how they were going to feed themselves, and all this stuff. And so we, kind of activated and mobilized and created an overnight organizational structure. And so what we did, we put signs up, huge banners in the front of our house. We got notified by whatever it was. We got asked to take them down by the city, and we so what? But we had these big banners, and it said, need help, give help, call this number. And we ended up having around $50,000, $60,000 given by people driving by the front of our house, didn't know us from Adam, and get to this organization. And we had about 150 neighbors that had linked arms, and we had intake. So people would call and say, hey, I'm struggling to make rent, food, clothing, dental work, all of this stuff. And so we would inbound. I'm sitting here at my desk taking calls. We put it in a system. There'd be a resource manager. And so we resourced this, and we're just able to love our neighbor, during a very difficult time. And, the touching part was there were a number of gifts given where the recipient then said, I didn't have money. Now I have money to pay my rent, but I'm a mechanic, and I'm going to contribute my services to anybody who, so it was a lot of fun. So we love community. We love growing roots in community. We love linking arms with neighbors. And that's probably the most fun thing I've ever done was during COVID, was the FOB initiative. And now we have a template and a blueprint so that the next whatever happens, and there will be one.
Yes.
We can dust it off and love our neighbor well. So anyway, it's been fun.
Mm-hmm.
That is so cool. Thank you for sharing that with us. We were talking earlier about how a lot of the old pastors and theologians think it's all just spiritual blessings in heavenly places, but it's actually both. It's here while we're here too. And that story you just told is amazing to me, because what actually happened was, as you served your community and your community saw you doing this and saw you just living that life, that's the best representation of what a Christian life should look like that I can think of. And you weren't even thinking about churchiness or trying to witness to them. You were just living your life in front of them. And that's what Jesus did. So That is so Christ-like, and the ability for you to do, at least some of the ability, came from the business success that you've had. It made you able to financially put all this together and to help these folks. And I wish America could get that picture and understand that's kind of how it works, but they won't unless they continue to see people like you doing what you're doing and all of us doing things like that. So thank you for your example. Yeah, we all grow up in church being taught we're supposed to witness, when really sometimes just living your life in front of people and walking with the Lord, they notice that and they learn more from that than they do from our words, I think, probably all the time. They think, why is this person different? Why are they helping me? What's going on here? And so they find the Lord that way. And I can remember preachers that used to mock that. Oh, you don't witness with your lifestyle, you witness with your words. But you know what? If you don't have the lifestyle, they don't listen to your words. So I appreciate your story so much. My point is, it's amazing how the Lord can work through you, through your business and what that's enabled you to do to help so many people. And you never know which individual out there the Holy Spirit's working through you to reach through all of this. But there's somebody, maybe many people. And so it's such a blessing. And this is what we want for all of us, everybody in our culture, everybody in our podcast here and the TRADEway folks. This is what we've been trying to develop for 20 years too through our company. So you guys are just like twins with us as far as your philosophy. And that is so cool. So thank you so much, though, for the time you spent with us today. And I hope we get more time together. Maybe you come to Texas, you'll come see us. Or if we come to Florida, we'll get together sometime. We'd love to do that. And thanks so much for being with us today.
Thanks for having us.
Absolutely. Thank you for having us.
You bet. Well, guys, don't forget to register for our Word on Investing Virtual Summit coming up on April 22nd, 23rd. You're going to hear more from Ryan and Jamie and myself and many other amazing guests like the Benham Brothers, Shane Sams, Dr. Myron Golden, and more. You don't want to miss it. Register for your free ticket at tradeway.com/summit. That's tradeway.com/summit. And join us Monday for another special episode featuring David and Lori Benham. We'll see you then.